Welcome back, investors. Jake here. Waiting is hard, and waiting is really all I can do at the moment. When we check in with the markets are green as of the time I'm recording this video. Dow Jones up 0.93, S&P up 1.2, NASDAQ up 1.03. However, my account, even today, is still negative. It's still going down. We're going to talk about exactly why. But first, let's just check in with the charts for the S&P 500, the broader market, so to speak. And you can see from the charts that we've pulled all the way back to this technical line of support at about 4,150. We touched here on February 24th. We touched again on March 8th, again on March 14th. And then there was that spectacular rally where the S&P got back all the way to 4630. So what's happening here is actually pretty similar to the last time we had earnings 3 months ago. There was a huge sell-off in anticipation for earnings. The earnings reports came out and they actually weren't that bad. They were still pretty darn good for the mega caps, which basically prop up the entire index. Because Microsoft, Google, Amazon are so big, their weighting affects the broader market. So what's happening here is, in my opinion, similar to what happened with earnings 3 months ago. Now, with respect to technical analysis, it works until it doesn't, and news and earnings are what completely destroys technical traders. So when I saw the market pull back, this is State Street's SPY, it pulled back the week of the 11th, and I was watching the stochastics down here. As soon as the %K got back above the %D, I said, well, this always happens. We get into the oversold range, and then eventually there's a bounce, there's a rally. This is just what the technicals do. However, Fed Chairman Jerome Powell opened his mouth and said that a 50 basis point rate hike was on the table for May. This caused these two huge red candles. And then we got into this week, which is earnings week. And so far, it's been pretty good, in my opinion. Visa beat on earnings, beat on revenue. Visa's getting a nice bounce. This stock is up 8.5% since before when they reported. Microsoft also had a pretty good quarter, even given the loss in revenue from shutting down services in Russia. But they still beat on revenue, beat on earnings per share. So Microsoft stock has seen a bounce of about 7.2%. Texas Instruments, a stock that I'm actually in, also beat on revenue, beat on earnings, had good guidance. However, Texas Instruments is not really seeing much of a bounce. You can see after hours that it sold off. However, people during regular trading hours are actually buying it. So I have hope for this stock that perhaps it can recover to the point of me getting out of it without losing money on my call contracts. So the big loser, if you want to call it that, from yesterday is Google. And Google is getting terrible headlines on a quarter that was actually still pretty darn good. So here are the headlines. Alphabet reports weak earnings and revenue on big YouTube miss. We're going to talk about this. YouTube's huge miss shows digital media ad market is getting hit hard. Alphabet also announced a $70 billion buyback. I just love that number because Elon Musk just bought Twitter for $44 billion, and here Alphabet is buying back $70 billion of its own stock. So here it is. Here's the press release put out by Google for their quarterly earnings statements, and this explains everything right here. So we have the quarter-over-quarter revenues. This is $55.3 billion for the first quarter of 2021. And 2021 was pretty good for a lot of companies. This was year 2, basically, of the pandemic, and people had money, people had savings, people were still getting, I guess, maybe some of those stimulus checks. And then a year later, it jumped to 68 billion. This is Google's total revenue. So it's still a 23% increase year over year in quarterly revenue, which is pretty good for a company the size of Google. This is a lot of money. And their operating income also increased from 16.4 to 20. So their operating margin remains at 30%. So why is Google getting negative headlines? And it's this other category. This can be investments or random expenses, but they had a net positive on some kind of investment or sale or something last year of 4.8 billion, and this year for this quarter they had a loss of 1.1. So that's a net difference of 5.9 billion dollars. This is what is screwing up their net income because it looks like it went down. The first quarter of last year it was 17.9 billion in positive net income. This year it was only 16.4. But this isn't because of the business, isn't because of their operations. It's because of this other random category that their diluted earnings per share went down from 26.2 to 24.6. So this is what is mucking up the water and making it look kind of confusing for Google. Everyone else is pointing at the slowing growth of YouTube. So here we have YouTube ads. They did $6 billion in revenue last quarter, and this year they only did 6.8. This is a 14% increase, and I guess Wall Street wanted to see 20, 24% or something like that. I'm not concerned about this business at all. I'm not concerned about Google. However, if I'm trading debit spreads in the short term, I need Wall Street to read the fine print and realize that Google actually had an amazing quarter with margins of 30% and year-over-year revenue growth of 23%. So when we go to the charts, it's not looking good. We fell through this level of support at 2,500. We're currently at 23. You can see I drew in this longer slope line going back to the COVID crash. We can just delete that now. That doesn't exist anymore. So where is Google if it continues selling off? And hopefully it doesn't. But if it does sell off, more than likely it's going to fall to $2,000 a share. This is kind of the worst case scenario I'm seeing in the short term. So let's add we'll make this a green line. Now the concern is that 2,500 is now a new level of resistance. So even if Google currently at 23 sees a rally over the next week or two, as soon as it gets to 25, it's going to bump it and then sell off. So we could be in a new range potentially where the bottom of this range is now 2,200. I can't, it's going to take a week or two to confirm this. I'm going to go ahead and make this line red, but this is pretty concerning from a technical standpoint. Additionally, there is sort of this downward slope occurring that you can see with several points of contact going back to the whole market peaking last November. So I'm going to be watching the technicals for Google. I need to come up with a game plan here. When you look at their fundamentals, though, this is just ridiculous. Macrotrends.net hasn't updated yet, but it's showing Google's PDE is currently only 21. That's pretty good for a company growing at 20% year over year. Price to free cash flow, you can see that it's currently 25. I think after this updates, it'll be lower than 25. Price to sales, this is the only one where you can really nail Google, but given their high margins, it can have a higher price to sales ratio. Currently it's at 6. I think once this refreshes and updates with the sell-off from the last day, potentially the price to sales will be closer to 5.5, 5. So hopefully there are large funds that see this and start buying it. Google in the short term can see an uptrend. But as far as my debit spreads go, a 3% drop on earnings, this is what's killing me. This is what's hurting me today. I'm still not too concerned or too worried. I feel like the market in general is oversold, and in the near term, there has to be a rally. Just looking at the stochastics, this has got to go up at some point because these earnings reports aren't that bad. It's just the outlook on the future, given that a recession might be coming. This is what is spooking investors. But I think Friday will be green, given short sellers probably have to cover. We'll be through all the earnings. Facebook reports today. Amazon and Apple report on Thursday. So those are the biggest ones. Hopefully they're good. Hopefully we can get a bounce. But realistically, you can see this. This is what's occurring here. We had a local high. Well, we had the highest high, and then we had another local high here. So if the entire market bounces and we get a week or two of green days, potentially it's just going to hit this new level and then bounce off of that level. Potentially that could be, from a technical standpoint, what is occurring. But I'm fully leveraged in my accounts. I'm basically all in. I've only got $895 worth of cash. I need a couple green days to get out of this. Otherwise, yeah, I'm in trouble. But that's the game I'm playing. So there's not much I can do at this point in time except wait. Okay, everyone, that's all for this update video. If you enjoy these kinds of videos, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. Till the next video, I hope your portfolio and my portfolio can recover from this. We'll see.